Okay, now you will see the problem from 2015 question paper. In 2015 question paper, question number 10 is connected with limited liability partnership. Okay. And in this problem, X and Y are partners. They share profits and losses in the ratio of 3:2. 3:2. And they ask you their trial balance is like this. Capital X 1,20,000, Y 1,20,000. This is called as opening capital. Go to balance sheet statement under the head Partners Fund. Partners Fund. And sundry creditor goes to statement of assets and liability under the liability creditor. Fixed assets, goodwill. Fixed asset 2,70,000, goodwill 30,000. These are the fixed assets items coming under the asset side of your statement of assets and liability. Bills receivable and debtors. Bills receivable you may take as cash and cash equivalent. Otherwise you take as trade receivable. Okay. So these two comes under the asset side of the statement of assets and liabilities. Then cash in hand goes to asset side under the head cash and cash equivalent. Salary is the item coming under income and expenditure statement under the head personnel expense. General reserve goes to balance sheet under the contribution reserve and surplus. Reserve and surplus. Okay. Then advertisement. Advertisement is the selling expense. Selling expense goes to income and expenditure under the head selling expense. Wages is the personnel expense coming under the income and expenditure statement. Then office expense is the administrative expense coming under the income and expenditure statement. Then sales. Sales is the first item in the income and expenditure statement. That is turnover. Then purchase is the first item in the expense under the income and expenditure statement. Then opening stock and closing stock. Opening stock 30,000. We compare the opening stock with closing stock. Closing stock is 45,000. Opening stock is 30,000. So difference is 15,000 comes under increase in stock. Okay, increase in stock. The next is outstanding salary. You add in salary and take as other liabilities in the balance sheet statement. And office expense outstanding 13,500, add in the office expense, then take in the balance sheet. Okay, you take in the balance sheet. Then stock, first adjust in the income statement. Thereafter, you take in the balance sheet under the head inventory. Closing stock comes under inventory. The next is partners have drawing in their account as follows. Partners drawing is 45,000 and 30,000. So first of all, this drawing is considered as drawing of goods. You consider that as drawing of goods and add in the closing stock. Add in the closing stock in the income and expenditure statement, and thereafter you deduct in the balance sheet under the partners capital or partners fund. Okay. And transfer 7,000 to general reserve. 7,000 you take in the income statement at the last stage and add in the general reserve in the balance sheet. Opening reserve in the balance trial balance sheet 15,000. In that 15,000 you add this 7,500. 7,500. Then tax is 30%. We calculate tax on profit before tax. 30% tax. Okay. You are required to prepare this statement. So now you see this statement. First statement is income and expenditure statement. One particular three amount column. Income. First is turnover. Turnover means sales. You take sales. Thereafter, you take the other expenses. Sorry, other income. Other incomes are not in the problem. Thereafter, increase in stock. So increase in stock, first you take closing stock. In this closing stock, you add drawings of the two partners. 75,000 is the total drawing. First partner drawing plus second partner drawing. Total is 75,000. You add 75,000 drawing. 75,000 drawing you add. Total is 1,20,000. 1,20,000 is the total. Closing stock plus drawing. Then deduct the opening stock, 30,000. Now balance is 90,000. So difference in stock is 90,000. And it is ಏನಂತ ಕೇಳಿದ್ರೆ 45,000 ರೂಪಾಯಿ ಸ್ಟಾಕ್ ನೀವು ರೇಟ್ ಉಳಿದೈತಿ. ಅದ್ರಾಗಿಂದ ಮಾಲಕ್ ತಗೊಂಡು ಹೋಗೋದು ಎಷ್ಟೈತಿ 75,000 ತಗೊಂಡಿದ್ದಾರೆ ಗ್ರೂಪ್. ಅದು ತಗೊಂಡು ಹೋಗೋದಕ್ಕ ನಿಮ್ ಗೋಡಾವನ್ಯಾಗ ಇರ್ತಿತ್ತು ಎಷ್ಟು ಕೇಳಿದ್ರೆ 1,20,000 ಇರ್ತೀವಿ. ಈ ರೀತಿ ತಿಳ್ಕೊಬೇಕು. Okay. Next total is 2,95,000. Sorry, 7,95,000 gross income. Now you take the expenses. First expense is purchase. Purchase is 3,30,000. Next personnel expense. In the personnel expense there are two. First is salary. Add outstanding 3,000. Total 78,000. Second is wages 30,000. So salary plus wage total is 1,08,000. This is the second item. Third item, administrative expense. Under administrative expense, you write printing and stationery, 30,000. For that printing and stationery, add outstanding 13,500. If you add 13,500, your total is 43,500. 43,500. Next, you take the selling expenses. Under the selling expense, advertisement comes. You write the advertisement one item, that is 30,000. Okay. Thereafter, depreciation. Depreciation is not given the problem. And thereafter, interest. There is no interest. There is no interest on borrowing. There is no interest on loan. And there is no interest on capital. So this is also not considered. Next is other expenses. And other expenses also not given the problem. That is RDD. Okay. And if you take the total of the inner column total is 5,15,500. 5,15,500. Okay. If you deduct this in the outer column, profit before tax is 2,83,500. 2,83,500 is the profit before tax. On this profit, you calculate provision for tax at 30%. So provision for tax, you deduct 30%. 30% of that is 85,050. 85,050 you deduct, then balance remained is 1,98,450. 1,98,450. Okay. Then this is called a profit after tax. Profit after tax. Then transfer to general reserve is 7,500. You transfer 7,500 to general reserve. Transfer to general reserve is 7,500. 7,500 is to transfer general reserve out of the balance. That means 1,98,500 minus, if possible, you may put here. One lakh 98,450 So whatever balance remains is 19,000, 1,90,950. So you distribute it between the partners. First partner share is 3 out of 5. So his share is then 1,40,750. Second partner share is 2/5. That is 76,380. So total of this is 1,90,950. Okay. This is the profit. So you distribute the remaining profit. Once again you see this 1,90,950. 1,90,950 arrived after deducting 7,500 in the balance of profit. Okay. Balance of profit. So you take the total of these two. The total of these two is again equal to outer column 1,98,450. Then whatever balance remains, that balance goes to balance sheet. So balance is 0. 0 balance goes to balance sheet. Zero goes to balance sheet. Okay. This is the income statement. Next is balance sheet statement. In the balance sheet statement, assets and liability. Again, you have to draw one particular in 3 amount column. First is contribution liabilities. Under that, partners fund. First contribution of A. A's capital is 1,20,000. Add interest on capital, salary, in the share of profit. Only profit you add. The total of this is 2,34,570. Total of these two. No salary, no interest, nothing. So next drawing. Drawing 45,000 you deduct. Balance is 1,89,570. First partner. Second partner Y's capital is 1,20,000. His share of profit is 76,380. Total is 1,96,380. Deduct his drawing 30,000. Drawing 30,000 you deduct. His balance of capital is 1,66,380. So total contribution is 3,55,950. Okay. Next, reserve and surplus. You see this point very carefully. First, opening balance of reserve. Reserve opening balance is 15,000. Add current year transfer as per adjustment 7,500. Okay. Now total reserve is 22,500. Then liabilities. Under liability, first liability secured loan nil. Unsecured loan is also nil, not given the problem. Third is short-term borrowing, that is also not given the problem. Then creditor is there, you write the creditor 45,000. Other liabilities, under other liabilities, you write two items. One is outstanding salary, another is outstanding office expense. I have taken total as one item. Outstanding one item as 16,500. 16,500. The next is provision for tax 85,050. This comes as per your income and expenditure statement. Take the total. Total is 5,25,000. This is liability side total. Liability side total. Then asset side, first is fixed asset. Under that, again fixed asset you write 2,70,000. Second is goodwill 30,000. Total fixed asset is 3 lakh. B investment, no investment in the problem. C loan to advance, that is also not in the problem. Next is inventory. Inventory means you take closing stock. Closing stock is 45,000. And next debtors you write 1,05,000. You write the bills receivable. You may take this bills receivable here, or you may take the bills receivable in your cash and cash equivalent. Total 1,65,000. Cash and cash equivalent, that is the cash, 15,000. 15,000 cash you write, then other assets nil. So total is